Hi everybody and welcome to the Forex Update with myself, Kathleen Brooks, Research Director here at Forex.com for the week beginning Sunday the 14th of April 2013. Well, as we start a fresh week, the Bank of Japan is still very much in focus. That's what we saw last week, very much a Bank of Japan trade going on. We saw high yielding currencies rally, including emerging market FX. We also saw obviously the dollar yen climbing to record multi-year highs. We saw the euro dollar and the pound also recover. So really the stock markets and the FX markets, they were very much being led higher by this Bank of Japan trade. Now, as we start a new week, there is a lot of economic data out. So there's a lot of economic data out of the UK, of Japan itself, also out of New Zealand and Australia, which could just maybe dilute the impact of the Bank of Japan on the markets and the way that some of these high yielding currencies perform as the market returns to their own domestic fundamentals and starts looking at them a little bit. Now let's take a quick look here at dollar yen. As you can see at the end of last week, dollar yen was very close to that 100 level. In the European session, it hadn't managed to climb above there. It was very, very sticky around 100. Now that is very, very normal. We would expect that, largely because 100 is a massive psychological level. We haven't been there for many years, so a pullback is to be expected. However, we have seen investors come in and buy on dips. 98.80 was a very good buying zone. We expect that to hold, and for investors to eventually get above 100 and then maybe start targeting 105 in the medium term. Now, what we think will potentially get us above that 100 hurdle, which is a very high hurdle, is actually domestic economic data in the US, but also maybe in Japan, signs that there will be, that the data is that the inflation picture is still quite bleak and they'll need to do a lot more stimulus going forward. That's going to be the key thing. But as you can see, I've circled it there. We are so tantalizingly close to 100 now. Obviously, the more that we pull back from 100, that's impacting the other higher yielders. They're also taking a breather as the yen gets squared up a little bit, or there's a bit of profit taking. But once we get above 100, we're using this very much as kind of a benchmark almost for other indices. Once we get above 100 in dollar yen, we think then we'll see further strength elsewhere as that Bank of Japan trade really comes in, that liquidity trade, if you like. It's feeding the high yielding currencies. It's also feeding high yielding bonds and of course stocks as well. So that's good news for the euro. European stock markets, they're following their US counterparts higher, but also bonds, peripheral bond markets are very stable at the moment and attracting a lot of inflows, which is good news for euro, certainly in the medium term. Where else has this not been affecting, interestingly enough, is the commodity space. And that's because commodities are led much more by domestic economic fundamentals than they are by money printing by central banks. Let's take a look here. This is gold chart. Now it has gold priced in dollars, which is the white line there, as you can see, continuing to decline. And then we've also got gold priced in yen. Now gold priced in dollars has got back below that 1550 level. 1525, remember, is a key support level. We expect the market at least to respect that level for it to be very, very sticky on the way down there as investors just maybe start to buy at those low levels. We also think, however, that gold priced in dollars for sure, in this current environment isn't too attractive to hold because there's high yielding assets that is appreciating elsewhere, for example, stocks. Now, gold priced in yen, though, is a completely different story, and it really shows you the currency impact of gold. That's the orange line in this chart. As you can see, it's at a record high. So gold priced in yen is at a record high. People are diving into gold priced in yen because the yen is obviously falling on the back of all of this Bank of Japan monetary stimulus and fears of currency debasement. So gold is very mixed at the moment, and the currency impact is having a huge effect on where the gold price is going. So most certainly make sure that you do discriminate gold based on the currency that it's priced in. And right now, gold priced in yen, it just seems to be moving higher. So overall, good luck trading this week, and please do join us next week for more. Thank you.